I'm doing today, recording this on Wednesday, March 10th, 2021. We've seen the growth scare that was driven by the 10-year Treasury abate quite a bit this week. Reminded me of an important fact I'd read about the market about what happens if you miss the 5 best days in the market. Well, if you look over a study they did from 1980 to 2018, about 30 years, if you missed the best 5 days in the market, you would cut your growth by about a third over that 30-year period by just missing the 5 best days in the market over close to a 30-year period. If you miss the 10 best days in the market over that same 30-year period, your value of your portfolio is cut more than half. And if you miss the 30 best days over a 30-year period, you just miss the best day every year, your value is cut by about 80%. This is why timing the market and just staying in is usually advised, because imagine how many people lightened up or got scared last week, and then, come Monday or Tuesday, what happens? There's a huge rally in growth. Some names, the growthiest of growth names, like Tesla, Jumia, which you guys have heard me talk about before, they were up in the double digits in a single day. Jumia was up 25%. Tesla was up close to 15. These are significant numbers. It's just a lesson that try not to time the market, stay in and get out and get back in, because if you do miss one of these days, it can be pretty tough. Now, I will say these super strong days usually occur on the backs of these very weak days. Just another consideration. So usually when you're the most scared is when you're likely to miss the biggest upside, potentially. You do always have to consider your own risks, your own cash flow needs for the coming years. I always advise to kind of have your next 1 to 4 years of cash flow in retirement, right? When you're building your wealth in your early years, there's no way you're going to have 1 to 4 years of your spending. But as you come close to retirement, having 1 to 4 years of your spending in safe assets is usually pretty prudent. Occasionally more. If you had 8 years of your spending in safe assets, that could potentially protect you from a second Great Depression. Earnings have slowed down. We are in the more quiet period. There are still companies reporting earnings, but for the most part, the S&P has wrapped up. We're now a few weeks away from the start of the first quarter. The first quarter of this year is going to be a pretty good quarter based on not necessarily expectations, based on the numbers that we saw in March 31st of 2020. Why? This is because Q1 of last year was so terrible. Growth coming off that is going to be easy. You'll likely see the same for the June 30 quarter. You'll have tougher comparisons come September. So, we'll be long done with this class, but some stuff to think about. Additionally, what's going to come into effect here as it relates to finance and investing and personal financial planning, we're going to see a headline inflation number that is pretty high, right? Why is that? Similar to the prices of stocks last year and the business done by companies, prices collapsed a year ago. But now some, like gas prices, for example, have broadly rebounded. So this is called the base effect, right? Just looking at the year before, which, looking exactly 1 year back from now is a little bit of an anomaly. So these are things to think about in the coming days and weeks. We'll see higher inflation numbers. They will be a little bit artificial given that it's coming off such a low base. Again, the inflation numbers come the summertime, come September, are going to be a little bit more cleaner, right? And that's the hard part about dissecting some of the numbers and the growth numbers that will be coming out, is the numbers are kind of dirty, meaning like you might be basing it off a period of time that's not really a good comparison. It's a one-off event. But these are topics I could go on for extended periods of time, so I'll wrap it up there. Please feel free to comment with any thoughts, questions, anything you have. Thanks, and hope you guys are having a great day.